Hi, Austin, Texas. Jason Lichman here with Lichman Group and Remax Capital City. I'm here today with Keith Ann Steed, CPA with long-standing Austin accounting firm Glass & Company CPAs, about the latest tax reform bill. Keith Ann, thanks so much for being here today with us to help clarify on this hot topic. We've gotten a lot of people asking us questions. So.
Absolutely. There's a lot of information out there. Some of it's correct, some of it not so much, and I'm here to help in any way I can.
Well, we really do appreciate it. Well, for the viewers, President Trump passed the Tax Cut and Job Act on Friday, December 22nd, so just here the last month or so. Everyone wants to know, how will this affect me? How will this, affect my business and my return? Can you share with us today, the essentials components of the reform bill and who it affects and how it affects them?
Sure. There's so much in this tax bill. We're not going to be able to hit it all. I can certainly do my best to hit the highlights. I think the big thing that you're not hearing about is the decrease in all tax rates.
Okay.
So everybody's tax rate is going to go down. There's still 7 tax brackets. The top one was formerly 39.6%. That's going down to 37%, and it kind of trickles down. One thing to remember is that most of the individual tax law changes are going to sunset at the end of 2025, meaning that starting in 2026, the tax law is going to revert back to how it was in 2017. For corporate changes, those are more permanent as it gets in tax law, but those aren't going to expire. I think we can first start with the standard deduction.
Okay.
That for married filing jointly is going to go up to $24,000.
Okay.
So automatically a couple gets $24,000 deduction. They are taking away the personal exemptions. So in effect, it's kind of combining the two.
Tell us a little bit about the cap on income tax deductions.
Sure.
How does that work?
So this is kind of what has been thrown back and forth. A lot of people are talking about those high income tax states are losing the deductions that they were previously getting, and that's in the tax bill. They're not totally losing it, but those are limited to $10,000. And here in Texas, the way that relates to us is with our real estate property taxes and the sales tax that we could previously deduct. Those we can still deduct, but it is capped at $10,000. So if your property taxes and your sales tax total is more than $10,000, you can only take $10,000 of it.
Okay. Mortgage interest deductions, decreases on new loans, second mortgage interest deductions. Can you touch on that a little bit?
Sure. This is another area that they're lowering the threshold for the limitation. Previously, on your mortgage interest, if that mortgage was over $1 million, the interest deduction was limited. That is moving down to $750,000 for new loans. If you had a previous loan that's over $750,000, and that contract was signed before December 15th of 2017.
2017, okay.
Your loan is still going to be grandfathered in.
Okay.
So basically, if you have mortgage interest on a mortgage that's over $750,000, then that's going to be limited.
Okay.
One other big change with mortgage interest is home equity loans are no longer going to be, the interest on those are no longer going to be deductible.
Okay.
They're totally throwing those out.
Okay. All right. Investment properties. Can you touch on? I know we get a lot of people out there asking us a lot of questions about that and how this affects.
Yes,
them.
and I think that's one thing to note on that, where I was previously talking about that $10,000 property tax cap. That does not get applied to investment property. If you have rental real estate, whether it's residential, commercial, if you own the building that you're doing, that you're running your business in, the taxes on that are still fully deductible. That's not getting limited to $10,000.
Qualified business and income deductions. Can you touch on that a little bit?
Right, yeah, so this is another very complicated part of this tax bill. This is relating to pass-through income.
Okay.
And
pass-through income.
Pass-through income is
for the viewers out there.
Income coming from partnerships, from S corporations, from your LLCs, any sole proprietorships. That's going to be your qualified business income, and it does exclude any investment income such as interest, dividends, capital gains, that kind of thing. So the deal with this is you get a 20% deduction on your qualified business income.
Okay.
Now, there's a lot of exceptions and restrictions that go into effect once you reach a certain income threshold. Basically, how it affects you is going to be dependent on your situation.
Okay.
So you want to talk to your trusted advisor about how exactly this is going to affect you.
Okay. Child tax credit increase. How does that? What's some changes? I know we've heard about that one a little bit, but can you elaborate and give us a little more information on that?
Absolutely. The child tax credit. It previously the max was $1,000 for each child, and that started to get phased out once a married filing jointly couple hit the $110,000 AGI limit.
Together, you're saying?
Together, okay. Yes. And AGI.
AGI, great. I was just about to ask what that acronym was.
That is adjusted gross income.
Okay.
So once a couple reached $110,000, that $1,000 credit started getting phased out.
Okay.
The change starting in 2018, that child tax credit gets increased to $2,000, and that phase out doesn't begin until $400,000 for married filing jointly. So a lot of people that fall into the $110,000 to $400,000 income range are going to be able to take advantage of that tax credit.
Sounds like a pretty good little, that sounds like that's a positive change. Now, give us a little bit about the Affordable Care Act individual mandate removed. What exactly is that?
So really the only change in the Affordable Care Act is stays in place for everything except this one individual mandate, where you were getting penalized if you did not have health insurance.
Yes.
The penalty is going away.
Okay.
Basically. So you're still supposed to have health insurance, but if you don't, you're not going to be penalized for it.
Okay, so that's it in a nutshell, correct?
Yes.
Well, I guess, there's awesome, great information. Pros and cons. I mean, what do you think?
So the whole reason behind this big tax reform is the corporate tax rate.
Mm-hmm.
Corporate tax rates are going to be moved from previously 35% to 21%. And that's to try to bring business back to the United States. We previously had one of the highest tax rates in the world, and so that's what we're trying to lower that corporate tax rate to bring
business back, more jobs.
Mm-hmm. So I mean that's the whole reason behind this bill.
Okay.
And we're hearing all the negatives, all the deductions that we're losing. We're also losing miscellaneous itemized deductions, which include where you could previously deduct tax preparation fees and investment management fees and unreimbursed business expenses. Those are all no longer going to be deductible. You're hearing about all of the deductions that we're losing, but I think there are some positives. There't not a lot of focus on the fact that the tax rates are decreasing, and for W-2 employees, starting in February, your paycheck's going to go up a little bit because
sure people like that.
the IRS adjusted the withholding tables so that that they're adjusting for these decreases in the tax rates.
Okay.
So, in general, tax rates are going down, and everybody likes that, right?
So I guess for me to recap from what I'm hearing is we're bringing back business to the United States. That's what the push is, right? With the tax decrease for businesses, and that sounds like that's the biggest thing. And also they're trying to put more money in the pocket of the American people, correct? With some of these adjustments that are going down.
Decreases in tax
and we're
rates.
hearing a lot about what we're losing, but we're not 100% hearing about what we're gaining too. So
right. So there are some positives out there. It's not just everybody's losing their deductions.
anything else you can tell us that might help our viewers? And is there anything that we might have missed or?
Well, we definitely missed a lot. There's a lot of stuff out there.
Yes.
But hopefully we've provided some clarification on some of the high points. And if you have questions, you want to reach out to your tax advisor, because every situation is going to be different. Everybody's going to be affected in their own individual way.
Okay. Well, wow. Thank you so much, Keith Ann. You provided us today with a ton of information. I hope you guys all got that out there. If anyone's watching this video and is looking for a trusted advisor, Keith Ann and Glass & Company CPAs would love to take care of you guys. Their information is going to be on the end of this video. I really do appreciate it.
Well,
thank you so much
for
for giving us this information.
Absolutely.
Thank you, Austin.